Well, it is happening already. It's happened. Last I saw, there were over 5,000 pensions in the United States that had gone bankrupt and were turned over to the federal government. We have here the Pension Benefit Guaranty Corporation, which is supposed to ensure that pension promises are kept. Well, ironically, the PBGC is itself bankrupt. It's last I saw was $50 billion in the red. So you've got a bankrupt insurance company guaranteeing bankrupt pensions.
On today's episode of the WTFinance podcast, I have the pleasure of speaking with Ted Seidle. He's president of Benchmark Financial Services and national leading expert in forensic investigations of pensions. So, Ted, thanks for joining the podcast today.
Thank you for inviting me.
No problem. And I really look forward to talking about this because I think it's a really important topic that everyone should know more about, but for some reason we don't. And I know myself, I won't say the company, but I just have a pension scheme with them, and then I just put money in and I don't even look at it, which probably isn't the right way to do it. So I guess, can you maybe give us a quick analysis of what's currently happening in the pension system?
Sure. Well, first, let me start by saying I've written 2 books about the subject. One is called Who Stole My Pension, with Robert Kiyosaki, who is a well-known author of the Rich Dad, Poor Dad series of books. And the other one is called How to Steal a Lot of Money Legally, which is based upon my findings of having done over $1 trillion in forensic investigations of pension funds. This book tells you what are the secrets to stealing successfully and how are people doing it. So I'm a former SEC attorney, former securities regulator here in the US. And I've also done over $1 trillion in forensic investigations of retirement plans. The first issue that you and other workers and retirees have is you believe you have been promised certain retirement benefits. The operative word is promised. And indeed, that very word may have been used in your pension materials. So what workers and retirees around the world have been waking up to realize is that those promises are not being kept, and they're not promises at all. In fact, I wrote years ago that you can be certain that if you are working for a company that is looking to either improve its bottom line or to a company that's in real trouble, companies are every day hiring experts to tell them how they can legally break their pension promises. Those are called benefits consultants, pension consultants, whatever. So you need to vigilantly watch over your pension every day for the rest of your life, assuming you're going to get it for the rest of your life. So that's the first thing that I would tell your listeners, is that do not assume that the money is going to be there, that the money is there now, or that even 5-10 years from now, that your company will still honor its promise to provide retirement benefits to you.
Yeah, which is really scary to think. And I guess, myself, I've been you're told, 50 years time, you're probably not going to have a pension. There's probably not going to be any of that public support required. You're going to have to try and find a way to fund your own retirement, which is scary to think. So in the UK, which is where I'm based and probably why I'm biased and understand that system, from what I do is, and it obviously depends on the company. I think my company's outsourced it to, I think I'll say Fidelity. And so what happens is I put money in there, the company sort of puts a little bit in there as well, and then Fidelity manages that. Is that the same in the US that occurs? And then I guess from my perspective, I'm hoping that will still be there in the future. Why might the company that employs me not want that to be the case?
Well, there are 2 types of pension schemes generally. One is called a defined benefit pension plan, which is as the name would suggest, you are promised a certain benefit payment a month for the rest of your life, including often a cost of living adjustment. So you will not, let's say your pension was £1,000 a month, you might have a 3% a year cost of living adjustment so that it would go up over time. The other type of pension scheme or retirement scheme, which is not a pension at all, is what we call a 401k type plan or a defined contribution plan, where you put your money in, your employer usually matches it, but you select among the investment options selected by your employer, or what's called the menu. You pick where you want your money to go. So both of those plans have a cost to them. The pension plan is more costly to a corporation because they have to ensure that the money that they have promised you, the defined benefit, will be there. In the 401k or defined contribution plan, the company may have to match. There's a cost to that, and there may be a cost of running the plan. So both of them have costs. The true pension plan is much costlier to the corporation than the 401k type plan. But there are costs in both, and there are reasons to be concerned about both types of plans. There are risks that are not well understood. In America, the 401k type plan only came into existence really in the 1980s. So the legislation allowing for them was created in the 70s, but the plans didn't take off until the late 1980s. So it's only been about 40 years of experience, and what we found is over the last 40 years is that they've done extremely poorly. I call it the great 401k failure. The great 401k experiment failed. And that's what we have. So we have over the last 40 years, essentially basically two generations of workers who have been saving in these plans only to discover that they've done much worse than they had been told. Just recently, the state of Alaska, which forced all of their new workers, all the state workers, into a 401k type plan in 2006, or 17 years ago, just announced, big surprise, the 401k is only providing 40% of the benefits the traditional pension plan had been paying. Well, that I knew that was 17 years ago that the 401k was never going to provide the level of retirement security. I testified around the country, wrote articles in Forbes about it. So it was no secret. And the workers in Alaska got hoodwinked. And now they're waking up to the fact, a new generation of workers, they don't have nearly the amount of money saved for their retirement that they thought they would have.
And why has it underperformed? Because I guess if we look at the last 40 years, you'd say it's probably been one of the best times to be, if invest in stocks in the market. Most markets have gone in a positive direction. So is it due to the allocation of these pensions, or is why have maybe not performed as well as the defined pension?
Well, pension funds globally, and this, by the way, when Robert Kiyosaki and I wrote the book, Who Stole My Pension, Robert said, let's try to talk to pensioners globally, because as he told me, he sells more books overseas now than he does here in the United States. And so we tried to begin to address the global pension crisis. And one of the, you ask, why have pensions done so badly? And it's what I call in the book, gross malpractice generally practiced. So pensions around the world are uniformly poorly managed. There's a lot of reasons that I can go into why that is, but mismanagement of pensions is the reason why they've done so poorly. The famed investor Warren Buffett has told pensions they should be investing in low cost, fully transparent, highly liquid index funds. None of them have followed his advice. Warren Buffett has told pensions that they should lower their investment assumptions to, let's say, 6.5%. And over time, they've come down from 8.5% to maybe 7.5%. But again, they're ignoring the advice of Warren Buffett. Warren Buffett has warned pensions about investing in private equity and other opaque, secretive alternative investments. Pensions have universally ignored Warren Buffett's advice. So, in essence, the people managing the world's pensions believe they're smarter than Warren Buffett. And I think you know the answer to that. They're not smarter than Warren Buffett by any means. And they're doing the exact opposite what this fabled investor has been telling them to do for the last 20 years or so. So again, it's the concept of gross malpractice generally practiced. They're all the pensions around the world are doing pretty much the same thing. They move in a herd and they all defend themselves the same way by saying, we're doing what everyone else is doing. And that's right. They are doing what everyone else is doing, but they're universally doing the wrong things. They're investing in high cost, highly secretive, high risk investments that are underperforming. And there's no secret to that. It's well known that these investments do poorly, but they're doing it nevertheless.
Yeah, it's the easy way for them to steal money because, like, I guess you could say there's not really the incentive for them to just go into the index fund that tracks the markets, because then they won't. Why would you be paying them a fee to do that? So they're just going to try and make it as complex as possible to make sure that you, even if you're out there underperforming, you're going to continue to invest with them, because it's probably I guess it's probably the thing that you don't look at that often. You don't look at pensions. You might look at actively, if you're actively investing in a fund that's managing your money, you might look at it more. But if it's a pension, you'll just forget about it.
Well, you raised 2 points, and one is the beauty and the ugliness of pensions is that everything is long term. So you can say, we're doing terribly now, but as long as you have an expert who can say, literally, 50 years from now, the pension will be flush with cash. Well, the only thing I can promise you is 50 years from now, we'll all be dead. Okay, so I can give you all kinds of assurances about what's going to happen 50, 60, 100 years from now, because I won't be around to be held accountable. So the long-term nature of pensions makes it easy to both hide mismanagement and corruption, and to also creatively speculate as to investment strategies that may or may not work decades from now. But another simple example I like to give people is the pension crisis could be averted by investing in low-cost index funds. Yet that simple solution is exactly what people are not doing. It's like years ago, I bought my first Rolex watch. And I took it back to the jeweler, and I said, it loses time every month, maybe a minute or two. And he said, look, if you want a great timepiece, buy a Timex or Seiko watch. If you want a beautiful piece of jewelry, buy a Rolex. So if you want to spend $10,000 on a watch that tells time more poorly than a $100 Seiko watch or Timex watch, that's your choice. But that's what these pensions are doing. They're buying Rolexes that don't perform well because they are paying high fees to Wall Street. They're being convinced that these high cost, high risk investments are good. And they're ignoring the low cost, simple alternative that are known to perform better. And that is the Timex or the index funds. So to me, I think that's the best example is just think of the difference between a watch for $100 a time tells time better, or one $10,000 or $100,000 that's doesn't perform nearly as well.
Yeah, it's a great analogy. So why hasn't it changed? I guess there's, you've been talking about it for quite a while. There's more, you'd hope there's more people talking about it, that you'd think there'd be more transparency, but why hasn't it really changed that much?
Well, the reason it hasn't changed is what I call the retirement paradigm is extremely counterintuitive. The people whose money, the individuals whose retirement security is at risk, people whose money is in the pension fund, have no say in how the pension fund is managed. So, and that's very ironic. They have no input into they have really no mechanism for expressing their views. And so the people who are running the pension are people who are running it with their own objectives in mind. While the law is clear in every country, whether it's trust law or pension law or ERISA, which is the federal law we have here in the United States, the Employee Retirement Income Security Act, whatever law applies, basic common law is that a trust has to be administered for the benefit of the beneficiaries. That's not happening in any country. And that's because the people who are running the pension have their own objectives, and that might be the corporation wants to put less money into the pension, so they're going for more aggressive investments. They're rolling the dice. It might be because politicians in the United States or abroad are receiving compensation, campaign contributions from Wall Street investment firms. There are a number of reasons why the decisions are being made not in the best interests of the workers or retirees, but because of other hidden agendas. And that's the reason why. Why are these funds doing so poorly? Because you're being managed with other objectives in mind, and what those other objectives are is not clearly delineated anywhere.
Yeah, it's crazy to think. So I mentioned before that we saw in the UK there was a real risk that some pension funds could have collapsed, even though they weren't insolvent. So is there a risk that could happen in the rest of the world, or is that sort of where this is going? What is really the end game for the current trajectory that we're going on if nothing changes?
Well, the first question you have to deal with in any country is what is the degree of transparency with respect to any pension, any corporate pension, state pension, national, whatever. The first question is transparency. Is the information you're getting accurate and complete? So if you were to ask me, is this pension are the UK pensions solvent, or the Australian pensions, or the Japanese pensions? The first question would be, how complete and accurate is the information that's being provided? In no part of the world that I'm aware of is the information complete, accurate, and timely. So that's the first question. And what I point out in my books is that pensions routinely lie about their investments, the fees they pay, and about their performance. You can count on them to lie about those three things. And the best proof of it is you'll never see a pension admit that it's done poorly. So they can't all have done well. Clearly, somebody's lying. So that's a big issue. The other big issue, which Robert and I really point out here in this book, is that the United States is the premier financial innovator. We create some of the most toxic investments ever devised by man. We then export those investments around the world. So as I was writing the book, I think Australia and Japan were just starting to get into private equity. Now, private equity has been here in the United States growing percentages for the last 15 years or so, maybe 20 years. What we have learned over time is that private equity investments underperform indexes. They underperform liquid, publicly traded, transparent investments. So, and it's taken about 20 years for America to wake up to that. Well, perfect time to export this toxic garbage overseas, right? And so now the private equity industry will have another 20 years to fleece foreign investors the same way they have been fleecing American investors. So those are two big issues. One is the financial innovation, pension innovation is really coming out of the United States. The products and services that are proliferating here and being exported abroad are not the best. They are, shall we say, the most commonly used, and we already gets back to the concept of gross malpractice generally practiced. If your pension fund in the UK or Australia or Japan tells you they're about to do what America's doing, your antenna should pop up. You should run out of the room with your hair, as if your hair was on fire. So that's what is happening around the world, and that's something investors should be very concerned about.
Yeah, and private equity is a way that they can not write down any assets and unless it explodes. So we saw, I think it was the I don't know if it's Ontario teachers pension that they invested in FTX or something like that, and that blew up, and then they have to write it down. But unless these private companies blow up, they really don't have to write down the equity at all. So they can pretend that either it's made the gains that they've shown it has, or they can just not mention anything about it.
Yeah, and people think that most of these private equity funds appear to have like a 10-year life. They're a 10-year investment. But that's not true. Some of these funds have the ability to extend their lives. I've seen some that have the ability to extend their lives for 50 years. Again, what's going to happen on the final day of accounting? We'll all be dead. That's what's going to happen. So the private equity firms have, again, legally, the right to unilaterally determine the value of their investments, to disclose the value of those investments on a delayed basis, perhaps a year later. And they have the ability to extend the life of their funds for 1, 2, 5, 10, 20 years. So these are all mechanisms whereby the performance of the investment is not clearly stated at any given time. And if there is any fraud involved, it can go on for your lifetime. I call those 50-year lockup provisions, I call them cradle to grave investments, because if you invest in it today, you will probably be dead by the time you ever get your money back. So these are obvious red flags that should make these investments inappropriate for pensions. The mere fact that you have them proliferating in ever greater percentages in pensions tells you something is fundamentally wrong. It's like back in the old days in America, we had, and in UK, you had church funds that weren't allowed to invest in alcohol, tobacco, and firearms. So if you saw alcohol, tobacco, and firearms in the church portfolio, you knew something's wrong here, right? If you see high risk, high cost, highly secretive investments in your pension, something's wrong. And that's exactly what's happening. And that should be a real warning to all investors.
So greater complexity should be a red flag. Are there any other red flags that people should be aware of that you haven't mentioned?
Well, the key red flag is lack of transparency. Anytime, what I encourage people to do, and I used to write for Forbes, I'm now doing a new venture journal, which I'll be announcing soon. But what I've done increasingly is encourage people to, here in the US, file public records requests. In every state in America, there is what's called a Freedom of Information Act, or a law that requires public scrutiny of public monies. So I encourage people, write to your pension and ask for information. And I started showing the letters I've written. And that's, wait and see when you ask for that information, I guarantee you're going to be denied it. And so that should be, but that's a test. Maybe I'm wrong. Write to your pension. And so the initial and penultimate red flag is lack of transparency, because lack of transparency means your worst nightmare may be going on, but you're not allowed to see it. And that's what, if you're not allowed to see how your money is being invested, then why would you ever trust anybody? Why would you believe that the money is even there? In many cases, I have worked on American pension funds that have their money invested in the Cayman Islands and other places. And literally nobody knows whether the money's there. And when they finally ask 10 years later, they spend another 10 years in litigation trying to find out what happened to their money. So the lack of transparency is critical. One of the other concepts that I always talk about is for pensioners, if they're thinking of bringing a lawsuit or whatever, is first investigate before you litigate, negotiate, or legislate. Never happens. In the United States, there are certain states that have come up with quote unquote pension reform, which is always bad news for workers. And it's never preceded by a full investigation. So the fix can't be right because the problem has yet to be determined. So anyhow, I encourage people to investigate. First step in investigating is to ask for documents, ask for transparency, see what happens. And I suspect what you'll find is you'll be denied access to the documents, and then that will begin your journey. What are you going to do next? So again, the first thing is to try to push for transparency, and that is the beginning of your journey of understanding how is your pension being managed, what are the costs, what are the risks, how is it performing. All of that will follow, but the first step has to be trying to get the information. On the other hand, there is more and more information online today, but it's not complete. Information they don't want you to have is harder to get than ever. Information they're perfectly willing to give you is easier to get than ever.
Yeah, it's really important to do. So if people don't, go to these pension funds, if they don't ask, if there's no change, if everything continues to go the way it's going, will there be a point where people go to maybe start withdrawing the pensions once they retire and there's no money there? They can't go to that.
Well, it is happening already. It's happened. Last I saw, there were over 5,000 pensions in the United States that had gone bankrupt and were turned over to the federal government. We have here the Pension Benefit Guaranty Corporation, which is supposed to ensure that pension promises are kept. Well, ironically, the PBGC is itself bankrupt. It's last I saw was $50 billion in the red. So you've got a bankrupt insurance company guaranteeing bankrupt pensions. That should not be comforting to you. But we know that there are thousands of pensions around the United States alone that have gone bankrupt. And when they go bankrupt, the pensioners don't lose everything under our regulatory scheme, but they can lose a lot. They can lose half or more of what they've been promised. So it's important to be diligent and aggressive. And I mean aggressive because you are not, no one is going to willingly give you the information you asked for. You're going to have to fight for it. You're going to have to go to collateral sources for information. And you can. You could. I tell the story about, I had a Dutch film crew come here to meet with me about 10 years ago. And the reason they came to meet with me in Florida was because the investments in the Dutch pension system were created in America, toxic investments. And the Dutch system refused to tell them what these investments amounted to, what they consisted of. So they came to the United States to get information from an expert they couldn't get in their own country. Think about how ironic that is. So there are, and that's what I mean, collateral sources. If the people running your pension won't tell you what's going on, that does not have to be the end of your inquiry. You can go to other places to find information. And in many cases, the state pension fund here in Florida, I'm certain, has some of the same investments that the Dutch pension fund has. And so it may be easier to get the information here than it is there. But these pensions move in herds, therefore, there's a lot of commonality. So if you can't get an answer from your pension about investment ABC, you may be able to get an answer about investment ABC on the internet, in Florida, in California, in I don't know where, Australia maybe. But you can keep pushing back every time you're denied access to information. Keep going and seek the information that you want, because the people who are in power at these pensions are not going to willingly give it up.
Yeah, it's a vital point. So you mentioned before that the current insurance system to cover these bankrupt pensions is bankrupt itself. So if we get to the point, and you said that it's already happening, there's already bankrupt pensions. If we get to the point where this is a widespread phenomena, this seems like it's going to be quite a big issue for, I guess, the US, but also for the global markets and just global economy in general.
It is a big issue, and let us not forget, pensions are inextricably related to aging. That's what it's all about, really. As societies age and the number of older workers is greater than the number of younger workers, then the providing for the elderly, the aging, the retired, becomes a greater and greater problem. And we do have an aging global population. So this is a growing problem, and it will be, unless these problems are addressed, the problem is only going to get worse. So just a simple peek at global population demographics should tell you something. I am always very interested in the United States Census because there's a lot of information there that's valuable to business people, and it's also valuable to individuals. So yes, as there's every reason to believe that the problem of providing retirement security, by definition, to older people is only going to grow.
Definitely. So Ted, thanks so much for your time today. I really appreciate it. So my last question is, what is one message you'd like people to take away from our conversation?
The message I have is that if you are in a pension, you should assume that pension promises made will not be kept. And you need to become like a pension warrior. Get out there demand information and be relentless in protecting your retirement security. Because if you don't, like I said, there are legions of benefit experts who are out there figuring out how to screw you out of your pension benefit. So be diligent, be prepared to fight, because no one is going to give you willingly, easily the information you need.
Yeah, when they have such an incentive, they're going to fight tooth and nail to keep the benefits. So, Ted, thanks again for your time. If anyone, you've shown the books, which I'll definitely have to look into. Is there anywhere else people could find your work online or anywhere else?
Well, the books that I have, of course, you can order the books on Amazon, and my writings in the past have been on Forbes for the past 20 years, but now with the changing journalism and stuff, I'm going to move to some other formats that make the information more readily available without necessarily paying a subscription or whatever. So I would encourage you all to buy these books simply because they're the only books on the subject that exist. If you can find a better book on the subject, buy it instead, okay? So, and I'll continue writing much more in the future and doing more video as well.
Yeah, perfect. I'll put that in the description below. But yeah, thanks again for your time.
Okay, thank you.
Thank you so much for listening. And if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.